And now we're delighted to welcome a newcomer to the Truck and Fleet Conference who will share his critical insight into the latest market intelligence from the Middle East market. Gurhan Cevikel is Head of Market Intelligence Consulting MENA at GfK and has more than 15 years experience in oil and gas and automotive industries at top global corporations, including Shell Lubricants. In his current role, he works closely with top automotive companies to support their business growth plans through strategic levers, intelligence, market insights, and practical consulting solutions. Please, huge round of applause to welcome to the stage Gurhan Cevikel. Thank you so much, Gurhan.
Great. Let me just move this way. Yes. Great session by Thomas. It was so shocking, I believe, but also eye-opening for all of us. Thanks a lot for your time and patience. I think we are slightly behind the schedule today. I'll do my best to be crisp and make it interesting as much as possible for you. Before I begin, thanks a lot for the organization team, Truck and Fleet family, Stephen and everyone involved. Also big thanks to the sponsors like Bridgestone, Total Energies for supporting these great events. Thank you so much. Okay, let me begin. My name is Gurhan. I'm the Head of Market Intelligence and Consulting in GfK. I'm from Turkey, being based in Dubai now. A quick snapshot of GfK, my company, which was founded in 1934. It's a German company. Throughout the years, it became one of the top 5 biggest market research companies globally. Today, we represent our operations in more than 60 countries through more than 10,000 clients that we serve, and we track more than 500 product groups. What I mean by tracking is that we provide our clients in different industries such as tech and consumer durables, retail or automotive with retail audit reports where we can help them to have visibility on their performance on the market, on the ground to the consumers. All right, let me begin. Macroeconomics, some key facts and updates on how the world is performing in terms of the macroeconomics. So when we look at the IMF global real GDP rates versus previous last years, so in 2022, it ended up with a growth by 3.4%. Actually, the earlier predictions was a bit higher than that, but still good to see that the economy is slowly recovering, and the recovery continues in the coming years, including this one. So for 2023, this year, the prediction and the expectation is that there will be a global GDP growth of 2.9% versus last year as per the latest forecast. So which is a good trend and good economic sign for all of us. Of course, when we reflect this into our markets in the Middle East, we have slightly higher growth expectations in GDP in key markets such as UAE and Saudi, which is again good news for us. Inflation, definitely a key agenda and one of the most important topics for the end-to-end demand and the value chain. It's soaring and continues to increase and expected to reach around 6 to 7% globally throughout this year. And we also have witnessed that increase in our key markets as well. So it's now between 3 to 5% in Saudi or UAE in terms of the recent inflation figures, and especially in other markets like my home country, Turkey or Egypt or Pakistan, we are witnessing much more volatile and bad conditions in terms of the inflation rates. What is driving that inflation, as you see on the chart, is mainly energy and food, increases in these 2 key sectors. And without energy and food, we would be having much lower inflation, but that's the reality that we cannot avoid. But this impact will continue for a while until this crisis due to the wars, the supply chain disruptions, the cost increases continue in these 2 important categories. This is a very good indication from some experts. So during the recent World Economic Forum in Davos in January this year, so there was a survey as a question, where do the chief economists expect the risk of stagflation? So apparently Europe is where they flagged by 100% of them expects weak economic growth and also significantly higher inflation. United States is one of the other markets where they expect a similar situation. We are lucky to be in Middle East and North Africa region because by these experts the expectation is that we will be having less impact in terms of weak economic growth, and also the inflation expectation is better compared to the rest of the world. But I think we need to keep in mind that 1 out of 5 respondents of these chief economics expect the global recession to be extremely likely. So we need to be cautious and also make our plans in terms of potential recession to come next in the near future. Another insight based on another question to the same chief economists, what their expectations for inflation in the geographies, similar answers and information here. So they are most concerned in Europe and least in China. And as you see, the expectations for inflation in Europe is mainly moderate to high, while the expectation for MENA region is low to moderate level of inflations. This is another good sign for us to have a sustainable business environment and the overall cost and price strategy for the products or the transportation industry. One other important indicator, the consumer confidence. Compared to last year, this also shows some decrease. So consumer confidence to us is a key indicator for the household consumption of the population. So when there is a decline in here, means that there will be a decline in demand. So this will also have an impact on the overall value chain and also the business modeling for the industries overall, because this will have an impact on the entire sectors and industries, as this will be the key indicator for the consumption in the coming year. Supply chain disruptions, I think perfect storm is the right way to call this in the last couple of years. The industry have witnessed big disruptions and hardships, starting with the pandemic, along with the semiconductor chip shortages. There were also shortages in many raw materials, and the prices went incredibly higher. But then lately last year we have seen the impact of the increasing inflation rates, the war in Ukraine, and at the same time now the consumer confidence and demand dropping. So this is a very volatile environment, and unfortunately this will keep going on for this year. So I think now what we have seen is the good captains who know how to move the ship in these wavy oceans are the ones who could survive, and it will continue to be the case to be really having the optimum resourcing and good planning for the future business in this year. But some other good news despite this fact. So the shipping costs globally are 76% lower than last year, which is good news. So it's settling and coming back to normal. But unfortunately, still 46% higher than the level in 2020. So it's not there yet to be the expected or desired cost for the shippings. But some other good indication or information is that the lead times on average for shipping went significantly down. As an example, between China and US, now it's around 55 days versus 80 days that used to occur in December 21. But still, it used to be 43 days back in December 2019. This is also getting better, healing, but not at the level that is expected by the pre-pandemic levels. Let me walk you through some recent numbers and insights on the global automotive and especially aftermarket industry. In 2022, based on our trackers and reports globally through key markets in all the regions. The global automotive aftermarket ended up with a total revenue around $64 billion in 2022, with a 3% growth versus previous year. Tires make up to 73% of the entire industry, aftermarket industry, and had a 2% growth last year versus 21. Lubricants and car chemicals globally had a strong increase by 8% compared to previous year, and it contributes to 18% of the entire automotive aftermarket revenue. Having said that, there was a growth in last year, but when we look at this trend and the graph in terms of this purple line on month-by-month growth and also the cumulated growth quarter on quarter, we see that the growth slows down, especially starting the fourth quarter. Why? As you see there, the cost of living has increased. There's a decline in the consumer demand and sentiment. So we need to be cautious about the planning for this year in terms of inventories and expectations for future business, because this trend of growth seems to be declining and decelerating starting this year. And also the baselines for 2021 was higher, as this was the year of recovery after pandemic. But now, as you see here, the growth may continue to be slightly lower in 2023. But another good news is that the revenues, so the shaded bars on the right-hand side, are comparison between 2022 versus 2019. Pre-pandemic levels. So all the three key industries of tires, lubricants, and spare parts exceeded the revenue levels than the pre-pandemic levels. This is a good sign in terms of recovery, but also we need to be cautious about the maximum that the market may achieve. So far we are having all-time high sales in key markets across the region for lubricants or engine oils and car tires. But this may also move us for a consideration that, is this the limit? Will there be a growth to continue, or there may be also a deceleration on the growth rate in these industries? When we look at the regional breakdowns, good to see that Middle East and Africa witnessed the highest growth after emerging Asia in 2022 compared to the previous year by 17%, with a total revenue by almost $4.8 billion in the global automotive aftermarket industry. The key decline came from China and developed Asia, as the pandemic and the impacts and the decline in the overall economics in there still in place. But when we look at the MENA numbers and also go into the breakdown by car tires and then to follow with lubricants. So to read this chart, the horizontal axis is the sales by $1 billion, and the vertical axis represents the growth rate. So you see the Middle East and Africa with the red square circle over there, and the size of the circle represents the value at the same time. So good to see that the MENA was one of the key regions with the growth rate around 15% for car tires. It's not here, but if I may share a few updates on key markets. In 2022, car tires alone in UAE has shown around 30% growth in revenue. Similarly, the same for the lubricants industry. So which is a big indicator of recovery, probably like all-time high growth achieved for these industries in UAE by 30%. I think we all witnessed the heavy traffic, increase in the number of population. So this will be something to consider in the plans for the inventories, the production, and also the transportation of the goods. When it comes to tires, this was around 10 to 12% growth in Saudi, both for car tires and engine oils. So this is the regional breakdown for the global engine oils. Again, Europe and China has a much bigger value share across the regions, but MEA was one of the highest growing regions together with Europe and emerging Asia in the lubricants product group in 2022. All right, I also would like to share some highlights and updates on the commercial heavy-duty trucks. Based on a research we made in Saudi Arabia last year in the fourth quarter, what we did, so for a custom and also syndicated project, we interviewed more than 150 truck owners, drivers, and fleet owners and drivers in 3 cities, Riyadh, Jeddah, and Dammam, with face-to-face interviews. Out of research, let me share some highlights and insights that we gathered, which is quite interesting and in line with the earlier discussions that we have seen with the friends. So in terms of the heavy-duty truck profile in Saudi Arabia, on average, fleets own 36 trucks. So this is the average fleet size in Saudi. The good thing is that the age of the trucks, 60% are less than 10 years old. So when we add up this 29 and 33 for the less than 5 and 5 to 10 years trucks, so majority of the car park or vehicle park is less than 10 years old. And 67% of the fleet owners purchase first-hand trucks. So this is great in terms of innovation, sustainability, use of premium products for the industry. And as expected, 44% of them are associated with logistics and transportation, followed by trade and manufacturing in the country. We have learned a lot about the current situation, as you mentioned, the reality and the theory in terms of the emissions in countries like UAE and Saudi. Based on the latest information with the United Nations Environmental Program, unfortunately, Saudi still lags in the policy formulation and the implementation on this scope. So hasn't set any emission limits yet. So the air quality standards are not set yet. Despite the efforts from SASO, the nodal government body, who released the corporate average fuel economy standards last year, and also confirmed the implementation of 10 ppm sulfur diesel and gas fuels. And as Richard mentioned during his presentation, so 10 ppm is the standard starting from Euro 5, and which is in line with the recent regulations by SASO in Saudi. But unfortunately, we don't see the traction or the progress in this manner. So that also brings us the question why and what we can do about this. I think it was a good discussion that we had in the morning, that as the industry thought leaders, there is much we can do in terms of communication as the OEMs, aftermarket product manufacturers. But it seems like the issue also lies with the awareness about the emission norms. So based on our study, only 37% of the fleet owners are aware of Euro emission standards. Because they are not like Shivananda and like similar size of fleet companies and like owners or like professionals who have this good understanding and knowledge on the importance and how this can bring value to their company. So considering the size of the fleets, especially for the small and mid-sized fleets, they are still not aware of the emission norms and the importance. And in the basic marketing for selling any product, first you start with awareness so that then there's consideration and purchase in the path to purchase. So without awareness, we cannot expect them to go and purchase trucks with Euro 6 and Euro 5 norms. So how to build awareness at the entire fleet ecosystem is a question that we need to address, as mentioned, together with the government bodies, OEMs, and also suppliers of other aftermarket goods such as Total Energies, Bridgestone, who have already shown their intention, products, and also the approach in taking their part and responsibility in that. Of those who are aware, 60% have their heavy-duty trucks with Euro 5 and Euro 6 norms, and most of them are fitted with DPF. So once there is awareness, then it goes hand in hand with the consideration for these trucks and also definitely then purchase of these trucks. Another good insight we captured on the service behaviors. So on average, trucks, heavy-duty trucks are serviced 4 times a year in Saudi, which means like once in 2 to 3 months. And the distance traveled between the 2 service periods is only 6,000 kilometers. For those who know the practices in like developed countries or like with better road conditions or knowledge on the industry, this is 3 or 4 times higher. So then definitely this brings in the question or the approach that Melanie has mentioned while sharing the new product portfolio of Total Energies, how we can help these fleet owners and the players in the ecosystem to really understand the total cost of ownership concept, how these products can help them to have more value by having 1.5% fuel, less fuel consumption with use of the right lubricants or tires, which will make a big impact in their overall P&L. I think lubricants and engine oils will take the lead on that scope, as when we look at the types of services availed, when this is the index of 100 for engine oils, the others are followed as like gear oil change, filter change, wheel balancing, and DPF cleaning, and so on. So the main driver for service is engine oil change. So as long as we can extend the oil change drainage interval, this will also support the improvement in terms of the less consumption of all the spare parts. We also had some discussions on e-mobility, so I would like to share some highlights and updates on that one too. So it's no secret that around 2030 or 2035, especially starting in Europe, internal combustion engines will be banned and phase out. But looking into this chart, then it's expected that Asia, especially China and North America, follows the same route. But how is the progress so far? So when you look at the market share of EV cars, which are a combination of battery electric vehicles and plug-in hybrid vehicles, okay, their share globally increased to 13% across the entire car park versus 8% in 2021. Significant growth. So it seems like, or proves that in terms of the passenger cars, the transition is happening and happening really fast globally. Of course, the plug-in hybrids play a key role in that one too, but considering that last year there were 10.5 million EV cars sold globally, mainly by BYD, followed by Tesla, BMW, etc., and so on. So the change is happening, and as you see, in terms of actuals versus targets, China and Europe are ahead of their targets, and US is also catching up with their target of this transition into EV cars. So then, of course, we should expect the same story and the transition happening in EV trucks when the right combination of products and demand come together in full. In our region, for the electric vehicles, it's really still very low. So the expectation is that by 2026, there will be 50,000 EV cars to be sold in entire MEA. Sorry, considering the entire car park and annual sales of passenger cars, this is peanuts. So we need to take more measures and also government regulations and incentives to ensure there is more traction in the EV adoption in the region as well. Because this will also bring a significant impact to the aftermarket. Because once this traction happens, it's expected to grow by 25% year on year. Because these are all premium products, let it be engine oils or tires or other spare parts, which will also allow the industry to provide better services with more margins to the entire value chain. Yes, electric mobility is taking the lead in every form. I think this is a summary of this slide. You see three-wheelers, flying cars, snow bikes. May not be very suitable for the region, snow bikes, but still a good thing to see happening. Then seeing that all these type of transportation tools are getting converted into EV forms, I think we should expect more advancement in terms of the technology for the EV trucks as well. Of course, there is a currently available portfolio by all the key manufacturers and OEMs, but I think it's the main question around when the battery technology will catch up with the advancements in the production of the EV trucks. Because we were discussing with Mr. Tümer from Daimler in the morning. So despite the fact that Daimler is capable of producing the best-in-class EV buses or trucks, still the battery technology is not there yet to sustain the expected mileage for the truck version of the EVs. But I think we are getting close to that, and once this happens, we will see a huge traction and progression in the adoption of the EV trucks in the region. My final slide about the summary of what I tried to share with you today. Opportunities. I mentioned about global recession risks and increases in inflation, but at the same time, there is an increase in demand depending on where you can find it. Emerging economies, even in our region, possess a good potential for growth, and China is going to be reopening soon. And this will also support the growth of the entire economic ecosystem. Strong revenue performance. Premium products are sold much more compared to previous years, despite the economic hurdles in the overall drivers by inflation or cost of living. Because you know that saying, right? I'm not rich enough to buy cheap products. This is also the approach for some of the consumers or the customers in the industries. And also convenience and performance are really fueling the growth for categories like synthetic engine oils or tires formulated with sustainable raw materials. E-mobility, I think we discussed that government policies will need to continue and put more pressure on manufacturers and also create more awareness at the consumers and the transportation players. But what are the challenges? I mentioned supply-demand imbalance. So throughout 2022, considering the ongoing growth, manufacturers increase their stock levels, but now the growth is decelerating. So there might be an imbalance in between the supply and demand. So this is where the transportation industry will need to play a key role in optimizing the resources, spaces for those industry inventories, and also bring the supply and demand in different geographies together at the right time. Cost of living crisis, yes, inflation will continue to increase. That's why you need to be cautious about the choices in terms of your investments by markets, by channels, and also industries. As I mentioned, food and energy will still continue to drive the increase in that. And also the decline in the consumer's confidence, then we may then expect a decline in demand in some major categories in terms of the household spends, including our region. So this is also what we need to consider while making our business plans for the year. Thank you so much.
Thank you very much indeed.